inflation cools to 4%. That's the lowest in 2 years, but it's still too high, well above the pre-pandemic average and the Fed's target rate of 2%. Consumer prices ease, but underlying pressures persist, still burdening Americans. To talk about this is President of Johnson Wealth and Income Management, Matthew Johnson. Matthew, welcome. Good to have you. So the administration obviously is probably going to be very happy to hear this new consumer price index. The markets are too, but what about folks at home?
Well, thank you for having me on again, Alicia. You know, it is absolutely true. We're still 100% above what the target is that the Federal Reserve wants as far as inflation. And the reality is that what's happening on the headlines versus what you and I feel as average Americans and what we're having to pay for groceries and medicine and all the other services that we render each and every day, they are still very much inflated. And this is still causing that pressure, even in the housing. We see when we kind of dissect the CPI, you understand that there's, certain areas of that consumer price index that's still showing extreme inflation and extreme pressure. And that's really kind of the thing that's been giving the Federal Reserve a bit of backlash, because I know that they want to be able to continue to bring inflation down, but the economy is still very much roaring in certain sectors and is causing the Federal Reserve to have to continue to take drastic measures in increasing interest rates. That's why we've seen unprecedented increases, 10 of them to be exact, all in succession.
Yeah, so 4%, it's way down from that record high that we saw about a year ago of 9%, 9.1%. But people still remember that. They continue to feel the repercussions as they're paying off debt from things that you're really not supposed to have debt for, like essential expenses. But at least it seems like prices are easing at the grocery store, at the gas pump, even though I just paid about $5 for a gallon of gas yesterday here in Southern California. But other costs, Matthew, especially rent, are still climbing.
They are. There is still quite a bit of pressure, as I said earlier, in various different sectors. And, one of these things that we have to kind of keep in mind is groceries are going to act different from medicine. Medicine's going to act different from consumables. That's going to act different from housing. And when we think about it, what are the essentials that every single human being needs? Well, they need shelter, right? Well, if rent is continuing to go up and we're not seeing wage increases that are going to be able to compensate for that, that's going to be a problem to the average American. So there's still quite a bit of work ahead. And I think also you mentioned something without kind of mentioning it. And that is the fact that I think even though we're seeing these numbers coming down as Americans, the question becomes, but couldn't they go back up again? And I think that that is absolutely the case. We can still see a resurgence based upon what happens with the economy, what happens with the Federal Reserve, and the manipulation that we're seeing within our economic conditions right now.
Yeah, looking ahead, speaking of interest rates, might the Federal Reserve back off a bit after 10 consecutive rate hikes in its efforts to bring inflation down? Because it looks like inflation is going in the right direction.
Well, I think that it is right now. There is a very broad expectation that they're not going to raise interest rates in June. However, I don't think as a fiduciary I would be doing my clients a service if I didn't prepare them for the fact that we may actually see the Federal Reserve do yet again one more rate increase. And that's because they continue to tell us, and I believe them, they're looking at data. Now, some of the data is kind of messed up in my opinion, but they're looking at this data and they're saying, listen, if the data is suggesting that there is areas that are too hot, we still reserve the right to raise interest rates one more time. And I believe we have to be prepared for that. Certainly, I'm not expecting any kind of a rate cut until either the very tail end of this year in 2023, or maybe the first quarter of 2024.
Okay, Matthew, keep an eye on it for us. Matthew Johnson, Johnson Wealth and Income Management. Appreciate your time today. Thank you.
Thank you.